Sometimes you may find some adjustments in the question, and you will have to consider all these adjustments in your statement of affairs. Before I start these type of question, I am to say the questions with the adjustment. Let me explain about depreciation, provision for depreciation, etc. First of all, I am going to take depreciation. About depreciation, you have already studied in details in your previous chapter. But let me remind all the important factors about the depreciation. Suppose on 1st January 2013, a furniture of rupees 2000 was purchased, and 31st December 2013, this is the closing of the firm, means books are closed on 31st December 2013. And it is said that depreciation on furniture is provided at the rate of 10%. That's all. So 10% of 2000 will be equal to 200 rupees. This will be the depreciation on furniture. Again, be careful. Have a look at the screen what is written, depreciation at the rate of 10%. Per annum word is missing. It means this is the flat rate. Flat rate means the depreciation is provided on the assets without considering the length of the uses during this year. Whether the furniture has been purchased for 1 month or 1 year during the year, the depreciation will be provided at the flat rate of 10%. Let me explain this thing through one more example. Suppose on 1st July 2013, furniture was purchased for rupees 2000. And on 31st December, you have to provide depreciation at the rate of 10%. So what will be the value of depreciation? 10% of 2000, that is equal to rupees 200. Means you will have to provide depreciation of rupees 200 at the end of the year. In fact, during this year, the furniture has been used only for 6 months. I mean to say the uses of the furniture during the year was only 6 months. So we were supposed to provide depreciation only for 6 months. No, because it's a flat rate. You have to calculate the value of depreciation on the closing balance, that's all. Forget about 6 months or 3 months or 1 year. Let's take one more example. Suppose on 1st January 2013, a furniture was purchased for rupees 2000, and on 31st December 2013, the depreciation is to be provided at the rate of 10% per annum. Be careful. In the previous example, the rate was 10%. Now the rate is 10% per annum. So when the depreciation is per annum, you have to take care of the uses during the year. Because today is 31st December 2013 and this furniture was purchased on 1st January 2013. Means the furniture has been purchased for the whole year, 12 months or 1 year. So you have to provide the depreciation for the whole year. That will be 2000 into 10 upon 100 into 1. That is equal to 200 rupees. So this depreciation has been provided per annum. Now, let's take one more example. Suppose on 1st July 2013, the furniture was purchased for rupees 2000 and provide depreciation at the rate of 10% per annum on 31st December 2013. When you are going to provide depreciation on 31st December 2013, the uses of the furniture during the year is only for 6 months. Because during this year, the furniture has been used only for 6 months from 1st July to 31st December. So you have to provide depreciation for 6 months only because the rate of depreciation is per annum. So you have to take care of the time also. Same as you calculate interest on principal. So that will be 2000 into 10 upon 100 into 6 upon 12. That will be 100. So be careful. The depreciation is at flat rate or per annum rate. And secondly, when you solve this question, you must write down at the footnotes that depreciation has been taken as flat rate or per annum rate, whatever it is, so that you can make your concept clear to the examiner. And one thing more, I would like to remind you that depreciation is provided in 4 situations. Number 1, at the time of closing. Number 2, at the time of sale. Number 3, at the time of expiry of asset. Number 4, at the time of change of method. And one thing more, sometimes you may find in the question provide for doubtful debts or for bad debts, means provision for bad debts or provision for doubtful debts. This provision for doubtful debts or bad debts are always connected with the debtors. So they are always calculated at the closing value of debtors, not the opening value. So there is no question of per annum or flat rate, because provision for bad debts are always at flat rate. They are never expressed in years or per annum. Suppose in statement of wares, in the beginning the debtors are 5,000 and at the end the debtors are 7,000, and you are asked to provide provision for bad debts at the rate of 10%. It means 10% of 7,000 means closing value. That will be equal to 700 rupees.